GKFX Prime presents the Market Analysis Webinar.
Hi everyone, welcome to the weekly webinar. Got some interesting moves to preview for you today. One of the standout questions is whether we're forming a top in the Aussie dollar. There's an inverse, there's a head and shoulders pattern in place there. We tagged 60,000 in Bitcoin over the weekend, and also dollar yen broken out from a long-term monthly declining trend line and just pulled back to it. So potentially some more extended upside in dollar yen if that declining trend line holds. So there's some of the highlights. I will get into all of the charts now, starting with the euro, run through the FX charts, then have a look at the commodities, then the indices and the crypto. Any particular charts you want us to cover, of course, let us know in the comments of the video. Otherwise, click that like button. That really helps spread the word about the video. Okay, so here's our euro chart. And so actually we got this pretty right last week. It's not always as simple as this in trading, but we pinpointed the levels pretty well. So we talked about if I just pull out the daily chart a little bit here, we talked about the 38% pullback level. So it's a bit unclear because I've drawn some other, let me get rid of this one for now. There you can see the 38.2% Fibo, you know, that we had highlighted as potential support alongside 117. And then we'd highlighted these previous highs through here, potentially acting again as resistance alongside 119. And that's pretty much where we find ourselves now, around that 119 area. And interestingly, we had a pin bar reversal from that area, but right afterwards we had a pretty much a bullish engulfing candlestick pattern, not an outside day as far as bar charts go, but a bullish engulfing, and then we've been consolidating after that with some inside bars. So potentially these inside bars are, you know, we're looking for a breakout of those one way or the other, obviously. Now the overall trend has been downwards, but we're back above the 200-day moving average. My inclination is to think that actually we can continue a bit more on the upside here and potentially push up to these two highs up here, which we'd previously highlighted. But also, I'm going to draw this Fibonacci back in now. You can see that there's a nice confluence with the 50% Fibonacci and these pre lows through here, and then potentially we could even go up to the 61.8, and that lines up quite well with the 121 handle. So those would be the upside targets. You know, if we break lower, you know, I've just drawn a little rising trend line through here. If we break down through that rising trend line, probably there's you know, it's a way to manage your risk if you are looking for moves to the top side, and you can imagine it would get a little drop down to 118 were we to give up this, and potentially even a test of the lows down at 117 again. But to me, this pattern on the 4-hour chart looks more bullish than bearish. You know, you could argue this is some sort of triple top or head and shoulders pattern, but I think it's more of a consolidation, more of a kind of bull flag, bull pennant maybe, a consolidation with after an up move, preparing for the next up move. But let's see. The British pound had a bit of a rough week last week. If we look at the daily chart, we can see that we had some pretty swift declines, down from, we didn't make it to 140, we stalled at 139 and came right down to challenge the lows again. What was more encouraging at the end of the week was that we had a tweezer bottom at the previous low. So potentially the beginnings of a double bottom on the daily chart, and actually you can see if we go down to the 1-hour chart, we've also got a double bottom happening on the 1-hour chart, which is an interesting addition of two time frames with the same pattern going on. So not completed Either one, only the longer time frame has only just started, and on the shorter time frame we've not completed it yet as of recording. But potentially some signs of strength at the end of what was a bit of a kind of rough week for the pound. Moving on to dollar yen. This is the monthly chart, which I don't often look at in these webinars, but it's interesting on this occasion because you can see if we're tagging this this previous high from 2016, also this one from 2018, and then you can see it correlates with this one in last year, and then here we are. We find ourselves again having broken above it, and potentially where we are now is a sort of a retest of that trend line. So then if we drop down to the weekly chart, you can see it in a bit more detail there. We had one test last week, and we're trending lower again, but we're right down near the trend line. So now we're just back to our daily chart, and you can see that actually what we're doing is we're just retesting those previous peaks there, and so far they've held. Now it's possible, and this is obviously a big long-term kind of monthly zone, so we could drop further. We could drop down and sort of tag these previous lows down here, drop a bit deeper below the trend line and still rebound. But certainly it would be encouraging if we got a close back above 110, which is obviously a big number, and it would also mean that we're closing back beyond this declining monthly trend line. I think that would be a bullish sign, and a sign that we're moving up to take out the highs and continue the uptrend, even though it's very it's been very steep already. If we take out this orange line here, then I think that's probably a sign that, okay, the monthly trend line has held for now, even though we got above it for a little while. Gravity pulled us back below, and maybe we're in for a deeper retracement. For now, the trend is up. We're not really thinking about that, but we've got these levels in mind in terms of risk management. This is the Aussie chart that I'd mentioned. So pretty classic looking head and shoulders here. And you can see we had one attempt below the neckline, but it ended up being a kind of bullish pin bar pattern, and potentially this could be interesting. We tried to sell lower, but we couldn't. We had a bullish reversal, and since then there's just been a series of not quite inside bars, but very closely aligned trading patterns through those days, and so we're just looking to see maybe if we get a push higher through this on a more sustained basis. Obviously had a false breakout there. If we get a breakout again, basically the level is about 0.7670, then that could be a sign that actually this false break lower here, this head and shoulders pattern is just not going to happen, and that we're going to trade back towards the highs again. So that whole thing that a failed pattern can often be a better signal than the pattern completing itself. If we do trade lower and we get a daily close below the neckline here, then that is a classic signal, and you'd look for a move lower, something to the equivalent of the head. But as I say, maybe some initial signs that it's not going to play out, and we get a challenge back up the left shoulder, and the right shoulder would be the kind of first target area if we break through this. Right, moving on to commodities, look at the oil market here. You can see I'll put a shaded area here because these are a series of inside bars. You can see that there was a pretty well-defined rising trend line, which we broke below, but there just wasn't quite the determination from sellers, and since then we've just really been going sideways, basically around the 60,000 mark, sorry, the $60 per barrel mark in WTI. And so I think this is pretty clear cut. This is the inside bars. It shows consolidation. It's a standard kind of volatility situation where you've had contracted volatility, and then you're looking for volatility to suddenly expand again in one direction or the other. And so for me, if it's a break to the top side, then we're targeting 67 again in the highs. If it's to the downside, then we've got these, we've got the 55 handle, and then just below it, which you can see on the weekly chart, is these kind of series of basically flat weeks before we had that last surge higher. And it also correlates with the 200-week SMA for what it's worth. So that's what we're dealing with here. You can see on this weekly chart that we have been buying off the lows. I mean, not we, but the market has been ending the weeks off the lows, which tends to be a bullish sign. So we could be setting up for a move to the top side here. Obviously the trend is higher, but if it is down again, this is, you know, this is the kind of levels just below 55 here is where I think it can go. But it's the inside bars here are potentially tradable here. I mean, a classic way you trade the inside bar is that if this is the kind of initial first candle and then these are the insides, you're basically trading a break either of the top of above the high, or trading a break below the low. Okay, moving on to gold. Now I understand that this looks a little bit crazy on first look. Again, it was one that we've done, you know, that we called pretty well, because we said, you know, we asked the question, is a double bottom happening down when we first held the low, and we rallied straight back up to the high. So in effect, the double bottom is in place here. You know, this is the neckline of it. You know, this is the base. We've pulled back from the base as you from the neckline, as you might expect, after a strong rally. And so obviously the question is, do we ultimately break it to the top side? Obviously in terms of this pattern, this level is significant. But one scenario that I'm toying with is, given that the overall trend is still pretty bearish in gold, you could say what we're doing right now is kind of consolidating after the losses. It's not, you know, it's not a bullish market by any stretch yet. One potential scenario is that, given this was an important kind of swing area, the 1760 for a while, you can see we kind of bounced off it, even around just around 1800 in general. It was a bit of a struggle to kind of get below, but if we finally did drop below it, potentially what happens is that you can see there's this low, and then there's also the fact that that's the 38% Fibonacci level of the overall rally. So let me just go to the weekly chart. It's this 38% level as well, just above. And then if we go back down to our 4-hour chart of this decline, it's a 61.8% Fibo. So if you've had that drop, and then you're waiting for a retracement to sell into a continuation of that drop, this is the 61.8% Fibonacci level. So potentially what could happen is you get a rally up from here. We do continue above the neckline of the pattern, but suddenly we stall at a confluence of major resistance around 1760 to 1770. And if there was some sort of reversal pattern in that area, and we drop down, that would be a pretty bearish signal for gold in my eyes. If there isn't any bearish signal there, then that's pretty much the breakout that you want to see the price move higher. But just watch out for that. Could actually be a good trading setup if you know, a lot of people buying the breakout above these highs, but then you have long-term players coming in and selling down at just slightly higher, using that buying power to initiate their sell trades and push the price back down again. So let's look out to see if that happens. If it doesn't, great, you know, then that means we've got a double bottom in place, and we could be looking up to a full retracement of this decline. Okay, moving on to the indices here. I mean, it's been a very strong move in stock markets. We pointed out this breakout last week, and it really hasn't, or was it the week before last, but it basically hasn't paused at all. Only one down day, I think, in the last 7 or 8. And so you can see, I mean, this was where the market paused, and it's broken out, and now we're just in a very strong uptrend. And so you really need to get down to the hourly chart where you can start pinpointing the levels of where to buy into, and that's just it's a personal preference whether you want to get into that level of trading, into that kind of into these kind of lower time frames. I know a lot of you do. Then these are the kind of levels that you're playing with. There's no clear longer term opportunities to talk of yet, because the trend is just strong. It's just going up every day. So no particular reason why to talk about a deeper retracement. There's no sign of that happening yet. But I am watching this rising trend line. If we go to drop through that, then it's at least maybe a sign we're going to go sideways a bit. We haven't really retested the 4,000 level. So if something is going to give way, maybe we go straight back to 4,000 again. Last but not least, here's Bitcoin. Again, on the kind of shorter time frame charts, but if you remember, I'd drawn these two rising trend lines in. I can't remember if this low had been in place when I drew them last week, but anyway, it's worked. These trend lines have worked on as of this latest low. It held that lower trend line and rallied up over the next 3 days and just about made a record high. But has since pulled back. So the possibility of a double top, but it wouldn't be my default assumption. The market still feels pretty bullish. Obviously seeing a pretty steep pullback at the start of the new week. But for the time being, we can look to all these highs through here. So we have the record high, but then we have these series of highs through here and where the price closed. And then we have this gap that we made over the weekend. If we fill the weekend gap, that's a potential entry point. And then we've got the ongoing kind of support that we've mentioned below from these rising trend lines. So I think still same idea. While we're above these rising trend lines, we're okay. I think it would be, it's an opportunity to sell short here, but it's such a bullish market. Personally, I would be looking for a bit more confirmation. Probably a move through the below these rising trend lines before I was starting to think something like that. Okay, and we're done. So thank you very much for watching again. Good luck trading this week, and make sure to subscribe so you can so you don't miss the video next week. Thanks everyone.